Hey guys, welcome to episode 4 of Candlesticks and Coffee. Myself, Stephan, Stony Financial, and Kimberly here and today we do not have a guest. We're actually going to go over some of the projects we've been working on and some viewer questions that we received on our Instagram for the last week when we were promoting this episode. So I'm going to head it over to Kim first because the listeners, I'm sure, want to hear about this project you've been working on that you've been teasing on your Insta story, Trader's Cheat Code. So what is that?
What's going on, guys? Welcome back. Thank you, thank you. Trader's Cheat Code. So I'm actually working on a product called the Consistency Cheat Code under Trader's Cheat Code, and it's really focusing on just consistency and psychology. I've gotten a lot of questions recently about, how do you become a consistent trader? What did you do to become consistent? What things do you notice that are different now that you're consistent from when you weren't consistent? And just a lot of consistency based questions. And I think psychology has become a very cryptic term to a lot of traders. It's a kind of a buzzword, when we know psychology is a big part of trading, but no one really breaks down, how to get strong psychology, where to find the things to become a consistent trader. We just always hear, oh, you need to have strong psych to be a consistent trader. So the goal of Trader's Cheat Code and the Consistency Cheat Code is really just to put the tools in your hands to bring you guys aware of the things that you need to do to generate that consistency, to get that strong psychology. And I'm really excited just to share that with you guys. It was a lot of research that I put into it, and it's essentially just the stuff that worked for me that brought me to be a consistent trader. And so I'm really stoked to share it with you guys.
No, that's good. Actually, a lot of people, I think that would help. And just to stack on that idea, from my personal perspective, that is something a lot of people don't think about is when you're good at reading charts to a level that you can develop a trade plan that's profitable. You understand back testing, you understand forward testing, you understand having, a good consistent amount of trades taken to, measure a plan, but you just lack the ability to execute based on fear, greed, and impulses. So no, that's a good point. And for me, I can say what I would have done is when I got better at catching myself in those moments, I would have like a base of questions, a line of questions I'd ask myself that would line up with the trade. And just knowing the answer to those questions kind of helped me to know whether or not I was being impulsive or I was being, a planned approach. So I think that's something cool to get out to everybody. We want to touch on one of the questions that you got on your Instagram, and that would be how to fail. So how to fail, how do you perceive that question, Kimberly, and what would be your, direct answer to the viewer who asked you?
So I think failure is pretty subjective. For some people, failure could be, just for what failure is to one person, it could be just a roadblock to someone else. And, sometimes it's the difference of like, is this actually failure or is it just you're not willing to do what it takes? I think it's very subjective to the person because some people who have the tenacity will see it as a roadblock or an obstacle or whatever else and figure out a way around it, where the people who, you know, it ends up being harder than they thought it was, just end up giving up. So I think it's kind of a subjective question, but in terms of that, I like to look at failure in a specific way. To me, I'm grateful for those moments because they're time savers, and time is a very valuable resource, as we know. So if there comes a point where, I'm like, okay, this is failure, instead of me traveling down this road for the next year and consistently losing in the markets, it kind of just saved me a bunch of time to be like, okay, you know what? This isn't the avenue that is going to take me to where I want to go. So thank you for saving me that time. Thank you for giving me that information. Now I can reroute and find a way that's going to work for myself. So I really think it's all, mental and how you view it and really understanding what's telling you that this isn't going to work or what's just harder than you thought it was going to be.
Yeah, no, beautifully said. I agree with you. And I think perception plays a lot into it. And when you think of it as a failure, and that's where the issue is. I mean, failure would be, I would imagine your only failure in trading would be just stopping, and not continue learning and not continue growing as a trader. Losing trades, which is the failure that most people see, a string of losses. Maybe you back tested and you had this perfect strategy, you went live with it, it didn't work. These failures aren't what failures are. Failures are like not adhering to your rules. It's never going to be like the result of a trade. And the way to think about it is, say you have, 3 losses in a row, understanding, failure would be diverting from your plan at that point, maybe over leveraging or taking trades that you're not supposed to take. But that's not failure. Failure in the market is not following your plan, because then your next trade would be that winning trade that makes all the losses back and then some. Maybe you're someone who's trading these 1 to 10s and these 1 to 7s you see that are popping up every now and then London opens. You can catch one of these and you could take 7 days worth of losses off of your account. So don't think of losing as failure. And I mean, my last month was basically flat, but my January month, my February month, or my January month made enough profit to eat that alive. And my 3 days of March is I've almost climbed out of that hole. Even so, I'm still pushing, double digit increases for the year with an entire flat 30 days. So think of that in terms of like one trade. You lose one trade. Is that failure? I mean, you're going to take another, I take like 7 trades a week. So you're going to take another 27 trades, and you can lose, 18 of those trades and still be profitable for the week. So don't think of one day as failure. That's another way to think of it as macro. Don't think of it so micro. It's the series of things over a long game, not just, the series of things over a day. There is something I wanted to touch on, and I think it's something that would help a lot of traders out. It's been recently something that helped me out in the last few months. Speaking in psychology and perspective, which we've touched on, which really affects your overall results in trading, not so much any one setup, but your approach and the way you think about things, is you need to think of trading more as a tool. And to put this into perspective, once you get past initially, becoming profitable in trading, you're going to start to realize that trading is really just the prop for the projects that you're going to be taking on. Say you want to get into property, say you want to get into a hobby, start a business, whatever you plan to do once you're successful in trading, because everybody's going to want to do something. None of us, I don't think, are going to be satisfied when we get to a level of 1 hour a day trading to only trade for 1 hour and spend 23 doing something else. So there's going to be another project you're going to take on. And when you get to that point, you're going to realize that you just want to pull a consistent profit out of the market and stop over trading so much and getting into the market more than you have to. You're going to realize that if you treat trading as a tool to pull out 1, 2, 3% a day and just stop there, it'll be easier to step away from the charts and use that money to grow what your future projects are going to be. And that's just something that I'm running into now. And I think a mindset shift that could help you guys as an earlier level, or maybe you're new to trading, treat it like a tool to pull money out of the market, not like a win-loss on any one trade. It's just a button you push based on a plan, and that's going to pull the profits out consistently. So look for small gains, small windows. You really want to get on the charts for like 3 hours tops. If you don't see anything, and then you just get off the charts and you go, you just don't come back, and treat it as a tool, that 3 hour workday.
I think that's really, really, really important to bring up because that can be a really big psychological block because I've actually, been through something similar where I realized at that point, like when I thought it was just like going to be trading, like, oh, what do you want to be when you're older? A full-time trader, whatever. Like I would think of it in these huge sums of money. Like I'm going to be a billionaire. And like we really have to get like realistic. I'm not saying that's not possible, but to go from, working a 9 to 5 job and you're seeing, less than just throw a number, say $1,000 a week, for you to make that mental leap of making, under $1,000 a week to then making millions or billions of dollars. It's kind of a tough leap to make. And then you miss that belief factor and then you feel kind of weird about it when you're thinking about it. You're like, can I really do this? Like it just introduces a lot of like psychological barriers into it. And when you, like you said, when you think of it in terms of a tool, you can start getting strategic about it. You can say, okay, and this is a point that Picasso brings up often, and he's so right about it. And I'm just going to touch on it briefly, but it's like, how much do I need in order to do this? And you'll surprise yourself with like how obtainable the numbers really seem, like once you break it down. And so if you're project is going to be something like this, and you want to invest in a rental property, and the mortgage is, say, let's say your mortgage is going to be $2,000 a month. How much do you need to pull out of the markets in order to pay $2,000 a month? And when you break it down daily, weekly, it's not that much. It's very attainable. So that kind of just makes it feel much better and brings a better energy around trading for those of you traders who are still having trouble with that belief factor. And also, when it comes to it, like you said, you're not going to want to sit around and do nothing. Once you're a trader, like most of your friends are probably still going to be working. That's the reality of it. Maybe like the people closest to you, and you're not just going to want to sit around and do nothing with your day, and you're going to want to get involved in other projects. And so you can start thinking of it as you're your own bank, right? You don't have to go for a loan now. You don't have to get approved for this. You don't have to do that. Like you are your
Exactly.
own bank. And that's what it comes down to. And it's such a powerful thing. Your family, your friends, they need something. You loan them money. You loan, other people, friends money, whatever else it may be. Like you are turning into a bank. And it's just a really, really awesome thing. But before we go any further, I know that you have some side projects going on right now. One of them, which isn't really a side project, it's actually a pretty big one, Stony Financial. I do want to hear about that and kind of see, your vision and passion behind that. And we'll talk about that for a little bit, if that's cool with you.
Complete. Stony Financial, I actually started it it was supposed to be a trading group. So between me and my buddies, we were going to have a group of traders. So like you would have, ICT, or just a Telegram with a catchy name. I was going to be a group of traders, and I was going to be a public journal. So I was going to collect trade breakdowns from people, including myself, and I was going to post trade breakdowns as like an educational platform from a trader's approach. That was what Stony Financial was. The Stony just goes into, I think, a very common mindset with traders. I feel like my personal personality is, I have a bit of anxiety, and my anxiety is what makes me think a lot. And I think what makes me think a lot is what makes me successful in things like Forex. So I celebrate it. I don't push it off, ADHD or any way that you learn. I think just we all perceive information differently. And I think some people just think in a very mantic fashion, but that mantic fashion is very focusable, but it's straining. And I think it gives you anxiety. And that's what makes you, you know, think a lot. And you're always, that's what draws us to Forex, I think. Because, well, you have your friends that you talk to about charts and they're just like, okay, like I work construction. Like, I don't know what you mean. But people, I think there's a certain level of thinker, and that thinker usually is someone who falls into like um, an exercise nut, or somebody who meditates a lot and is really into, relieving stress that way, or somebody who smokes a lot. And I fall into the smoke a lot category. And I thought that, Forex, as, any financial institution, everything's so boring. And it's hard to want to get behind, JP Morgan. It's hard to want to get behind, Charles Schwab. Like, these don't sound like things that pull together the demographic that is retail traders. And I think weed and people who, self-medicate and, they're more thinkers and they're open-minded people, they all would generate towards something more like Stony Financial, which speaks to who I am as a trader, and it speaks to who I am in the financial markets. And I think there's a lot more people like that than just me. So going into moving forward, obviously it became less of a trading group and more of a persona. So I run a refinement group. I'm sure you guys see me posted about it, and we just do trade breakdowns and live execution. And in there, I'm Stony Financial. I'm Stony. I was not so much gonna take the route of being, a persona to it, but that's what it's grown to. And my plans for Stony are to move forward. I want to get into business, so I want to be opening and supporting um, local businesses and try to put, a financial backing that is more, acceptable to a younger demographic, to show people that, you can get into markets and you can help your communities and you can move forward using Forex. They're going to see Sony Financial, they're going to question it. And then that's going to be a way to pull people towards trading. And that was my goal all along, I wanted to help my brothers, I wanted to help my family, and I wanted to do it all under the name of something that I could speak to. So they don't question it's from Stephan, they question it's from, Stoney's Financial LLC. It's from a company, and the company is, me and, the projects that I'm working on.
I think that's really awesome because you're right, it's an attention grabber for sure, when you first hear it. But when you look at like the logistics behind it, it's really cool because trading is often a very left-brained, logical, number-oriented, suit and tie type of thing. And a lot of traders, obviously the ones that we know for sure, are all retail traders. And we're just everyday people. We don't it's not our 9 to 5 job to get up and go to a big bank and worry about this stuff. This is stuff that we're trying to do for ourselves. And so we bring our individual personalities into it because we're doing it on our free time, when you're starting out. And I think that's awesome that you really own, who you are. And it's very legitimate because I know you said you have anxiety. My friends know for sure I have anxiety. They hear about it all the time, but and it's true. Like it's like I overthink a lot of things, and I think it does play. Don't get me wrong, a lot of times it did hinder me in my trading because I would bring it up every single example I've ever seen in my life that happened on the chart, and then my mind would be like, going, well, is this going to happen? Is that going to happen? Is this? And I would just be like frozen. But it definitely helped me kind of dig deep into a lot of the information and want to find something that worked for myself. And I think that, for you to be open about who you are and what works for you is awesome because we need more people like that, especially brought into a space like this.
Yeah, thank you. And yes, I mean that's the plan. We're gonna hopefully get more attention to it and grow it as kind of like just a group. So like what is would just be a hub, I guess you would say, is what Stony would be. But we're gonna work past that hopefully. So we also want to touch on one more subject, and I think you had a friend with some personal experiences with this, a dopamine detox. We've seen it from the big mentors out there. You see it from Instagram influencers. You hear it from everybody, a dopamine detox. So what was the experience that your friend had?
So me and my friend were just talking back and forth a bit, and I know not everyone in here or watches this might be in CFX, but a lot of our majority is. So DC did a dopamine detox, and he posted a video about it, and my friend, went ahead and watched it and got into it, and he said he made this connection, and I think it's a very valid point. He said a lot of people, who jump from strategy to strategy, it might just be due to like that dopamine hit that we get in a sense, like that new and exciting thing, like that thought that okay, this might be it. This might be the strategy that's gonna make everything click for me. This is gonna be the profitable one. Like, and every time you see a new one, you get excited because you might not be getting from your strategy what you want, but it might not, it most likely does not have anything to do with the strategy. It most likely has to do with you, your psychological barriers and stuff that you might not be doing properly on the charts. And so I thought it was really interesting for him to mention that because it's true. Like, if you think about it, like shopping addicts, constantly like just wanting something new. And it's the same thing on the charts, essentially. When you just keep jumping from strategy to strategy, you just want something new, thinking this is going to be the next best thing. And I thought about it. I'm like, you know what, like Stefan, I'm like, I really respect you for a lot of reasons, but one of a big reason is that you've always stuck to your own with trading. Like everyone was jumping on the next bandwagon, and you trade very differently from anybody else I know. And you've never jumped to any bandwagon, at least that I've seen, since I've known you. And you did what works for you, and you stick to that, and you don't care who else trades that way. You do you, and it works for you. And I think that's amazing that you don't get caught up in the hype. And I kind of just wanted to talk to you about that and your experience with that. Have you ever been drawn to other strategies like? How did you come to that conclusion? Maybe other people could, benefit from hearing how you kind of just stuck to what worked for you.
Well, when I got my start, CFX was very structure based. Before CXU came out, that's when I was joined up with DC in 2019, and trading was very structure based. So when I learned how to trade, and it took me a while because I was working a full-time job, still am, and I didn't have much time to study. So I would have to get like 3-hour cram sessions in like 3 or 4 days a week, and it didn't give me a lot of time to execute. So it was a lot of going over the material before I really got into the market. So when I got into the market consistently is when I traded over to London and started waking up very early in the morning, and that's how I started my start. But I've always used session based. I never used session based volume. And when session based came out, what stopped me from jumping to that strategy was the success I had already found in the structure based strategy. And I had a tip from somebody, and it was actually from Mark Douglas, Trading with an Edge, um, Trader's Edge, that book, whichever one it was. It talked about that when you have a strategy that consistently works, you don't want to ever like replace that strategy. You just want to implement new ideas into it. So the way I think about things is when session based came out, I was trading structure. I would just watch my structure to see if it lined up with session based. I would never drop what worked in structure. And I came to a realization was the zones that I drew up that usually worked, which were certain 1 hour zones, structure based fours and structure based dailies, the session based levels usually lined up with the structure based levels anyway. So it gave me the idea that everybody's seeing the same thing as a different picture. So you do not need multiple lenses to see different approaches to the market. Any one approach can work. If you can trade a 4 hour zone, all you should really be working on is how to tighten an entry. And that's it. If you only take 4 hour zones, a novice trader will take a way too early entry and sell way too early, and an experienced trader will hold longer and they'll take a more precise entry prior to reversal. So really, you do not need to jump from strategy to strategy. You just have to consistently approach the market in one strategy, and you'll start learning the intricacies of the strategy and how to apply session-based volume with structure, and how to apply seconds time frame with structure and with certain entry styles, seeing head and shoulders or seeing lower time frame ranges, or the Wyckoff theories going, a lot of people are digging into that. Being able to read schematics. It's not about, using session-based levels. It's not about using structure. Those things all tie together. So really, whatever strategy you guys do, stick to it. Give it like 6 months to a year before you jump and you explore new ideas. Because if you're not giving trade enough time, a big sample size of trades, then you're really not testing a strategy. And it takes a lot longer than you think it does. But I would say 5 to 6 months to really understand the equity curve of a trading plan.
Yeah, I agree. I agree. It's funny, because I always tell people, like you said, you don't need 50 different lenses to look at, one thing. The market does one of two things. It's buying or it's selling. You know what I mean? Like that's it. So at any given moment, it's either buying or it's selling. And you just need one way to really tell that, and these different strategies are just different ways to see the same exact thing. If GU is selling at 7:30 in the morning for me, it's selling at 7:30 in the morning for you. It's doing the same thing. So no matter how you're looking at it or how I'm looking at it, they're just two different ways to look at the same thing. So there's, obviously there's better strategies out there than others because they're, a little more accurate, this and that. But a lot of the times they're all different things to see the same thing on the chart. So, I just want traders to keep that in mind when they're jumping from strategy to strategy. Like like you did exactly the right thing. You compared it instead of jumping ship. You kept your strategy and then you compared the new strategy to see how they lined up. And you noticed it lined up pretty often. So you guys were seeing the same thing for the most part. So there was no need to jump ship and learn something totally new. A lot of traders just jump ship without doing the research and being like, okay, is this showing me the same thing or is this showing me something totally different? If it's showing me something totally different, then I have to back test this to see which one's yielding more accurate results. And it's just, being in the lab, it's doing the work behind it, and instead of just kind of jumping to get that little dopamine hit or whatever it is that's causing you to keep jumping ship every time a new strategy emerges, you really have to kind of dial back and do the work for yourself. And I love that you found what works for you and you were mentally strong enough to be like, you know what, no, this is it. I don't care about the hype because it works, like you're a successful trader and I love to watch your journey because you've been so consistent in what you've been doing. Like you haven't switched it up once. If anything, you've just refined it a little bit more. But like you said, that's what you're supposed to do. If you find new details that can enhance your strategy, apply them. If the details don't enhance your strategy and they confuse you, then ignore them.
Yeah, exactly, and that's the last point I will touch on with your trading and the approach you take. What I am also drawn to about structure is it's easy to follow. There's not a lot of intuition and structure. We know what creates structure levels. Everyone sees roughly the same structure levels. Let's say you use trend lines. Trend lines can be completely different from person to person with the points, which ones you take, and those are very easily flawed and hard. You can't test them as often because your back testing results don't get yield the same results as your live testing because you're going to see things from different perspectives just from day to day. So structure is easy to know. It's easy to write down. Just think of it that way. If you have something in your trading plan that's susceptible to, your subconscious making a decision for you in back testing, then you don't want that. It can't be well, this might have won. If you're back testing like that, then your trading plan is leaving gaps for your psychology to just step in and say, no, it's good, just to agree with yourself, and then you'll put out strategies that are half cocked, and your results are not going to be the same. That's why you always hear the sayings that, oh, it worked in back testing, but it's not going to work in live testing. The difference is your plan so easily followed that it's just a click of a mouse. It's not, well, I'm going to use. So when session-based volume came out for me, knowing there was Asia Open, Asian Close, New York Open, Frankfurt Open, London Open, New York reversal levels, it was too many things. I prefer there's a zone above me and there's a zone below me. If it does not reach those zones, I do not take a trade. I can't have 3 zones below me and 3 zones above me because it's too susceptible to whatever mood I'm in that day. Maybe I'm in a patient mood, or maybe I'm in an impatient mood. And these aren't subconscious things that you just wake up and realize. Sometimes they affect your trading because you didn't have enough sleep, or maybe you took a couple losses the day before and your mindset's different. You can't have a trading plan that's susceptible to those changes in mindset. And that's why I say structure is king. Just trade structure. If you don't understand sessions, if you trade sessions, just make sure it's easily followed, that there's no way that you as a trader would perceive the information differently from back testing or live testing.
That's huge. Yes, that's really big. Leaving gaps in your trading plan for psychology to step in, like that is a point that needs to be, explored, because you're right. As soon as your subconscious and your psyche could step in, it's going to start trying to find ways to either justify or psych you out. Like that's it. Nothing good is going to come from your psychology and your subconscious stepping into the charts and making decisions for you. So that was a huge point. Thank you for bringing that up. Thank you for making that. It not only, opens my eyes, I'm sure it opens the listeners' eyes as well.
All right, well, I'm glad I could help. Next week, guys, we will have 2 guests, I believe, and we're looking at some very good traders that are going to teach you guys a thing or two about other avenues in trading that you can take and make massive wealth as well. Not so much the direct approach, but there's other avenues, the Forex markets, that you can take advantage of. So I'm going to thank you guys for listening. If you got here to the end, we appreciate the support we're getting from you guys. Follower base is getting pretty fast for us as people who don't have, YouTube channels. I do have one at Sony Financial, which you guys can find on my Instagram. If you guys want to check out any of the videos I have on there, we'll probably put them in the description. And Kim, I'm sure, is going to be having some content releases with his Trader's Cheat Code, maybe some promotional or breakdowns, and I'm sure we'll look forward to seeing those as well. So I'll see you guys next week.
Absolutely, guys. Thank you for joining. And yes, be on the lookout for a giveaway coming up this week, and super stoked to release the content to you guys. But I hope you guys take care, and we will catch you next week. Thanks for joining in.